Hi friends, this is John Kingston from JR Trading Zone. In this video, I am going to talk about the volatility index, that is VIX, India VIX. I am not going to tell the formulas and everything as usual. We are just going behind the logic and we are going to study and understand what is India VIX and how we can use it for trading. That's all. Okay. Actually, India VIX is used to measure the volatility. You all know what is volatility. Always market moves in a zigzag motion, without violent moves. If the market is having normal move, say if Nifty moves 100 points up and down in a particular day, it is called normal movement of the market. Sometimes the market tends to move 300-400 points on the same day and it reverses back, goes up and down, and it creates more volatility. That type of market is called volatile market. There are three scenarios where the volatility index can increase. Normally we consider VIX below 15 as a normal VIX, because traders consider that it as a stable market. Okay, up to 15-20 also it is not a problem. When VIX is increasing above 20, mostly the market is considered as a unstable market or volatile market. Okay, now there are three conditions for the VIX to increase. One, if there is any positive news, the VIX can go up and the premiums will rise on the call side. For example, we can say the budget day produced by Nirmala Sitharaman, where she cut the tax of corporates from 30 to 20%. That day Nifty shot up more than 300 points. If the Nifty is going to rise on the upside, the call premiums will shoot a lot compared to the put premium. Both the premiums will be increasing, but call premiums will shoot a lot when compared to the put premiums. Okay, when there is a negative news, say it is a war or corona crash, in that scenario also VIX will increase. Okay, that is the magic of VIX. If there is a positive news also, the VIX will rise and the premiums will increase. But when it is a positive news, the call premiums will increase more than the put premiums. If it is a negative news like war or corona crash, there also the premiums are going to increase, but the fear is on the downside, so the put premiums will increase more than the call premiums. Okay, the third scenario, we can say it is a binary event. Binary event means the event can be positive or negative. Consider that as an election result. If the result is good and if a stable government is formed, it is good for the market and it is a positive news, market can go on the upside. Okay, and if the results are not good and if any party is not getting majority, if no party is getting the majority, actually if coalition government is going to be formed, that is unstable government is going to be formed, and definitely it is not good for stock market and it is a negative event. It can also, the market can also fall. So three types of results: one positive, negative and binary events. These three events can increase the volatility. If you are a trader, any type of trader, option buying or option selling, strategy trader or any type of trader, before entering each and every trade, you must watch the India VIX and you should know what is the present market condition. Now when I am shooting this video, it is around 11 or something. Market is quite stable. Even though there is a high gap up, the market is not falling down. Even though the market is having a gap down, the market is not shooting up. It is not showing any violent moves at this present condition. I will show from the computer presentation how the VIX have reacted for positive and negative news. Okay, in my experience, I will say there is no particular measurement for VIX, but by experience, you are trading for months in the VIX 11 or 10, then immediately when the VIX rises to 15, there is a small volatility. Then when it goes beyond 15, 18 or 20, the volatility will increase. And if you watch its movements, you can know how Nifty is reacting according to the VIX. Hi friends, let's open the trading view chart and just type India VIX. Okay, now you see this is the day chart of India VIX. Now when I am recording, the India VIX is around 10.695. That means the VIX is very low actually. Now see here, here the around September 22, VIX was around 22. Look at here, VIX was around 33 here during the Russia-Ukraine war. Once again, let's go. This is the corona period where the VIX went up to 86. That means the premium is 8 times more than the present situation. This is 85. Now the VIX is around 10. This is the corona period. This is the Russia-Ukraine war period 32-33. Now the situation is very calm and now it is 10.69. Okay, now the market is more or less very stable. How to trade in the VIX situation, that is completely a different scenario. I am just telling to understand how we are looking at the VIX, how the traders are looking at the VIX. That's all. This is very simple. People don't go deep into the formula and everything. They come and view the chart, how the market is volatile and where the market is going to move, and is there any bad news or good news. You can all find it from India VIX actually. Friends, I think you got a good idea how to watch the VIX and its movements. That's all, because this is not a very big deal. Each and every time you can't go and trade according to the VIX, but we should know what is India VIX, how it is measured, and how it is what we say useful for trading setup, everything. I will simply say, before going for any trade, just go and watch the India VIX. When you take every trades and when months go and years go, definitely you know how and which condition of the VIX, how the market is moving, everything you will be able to understand very easily. There is actually nothing to study the formula or anything, but actually you can go and you can feel how the market is behaving according to the VIX rise and VIX going down. That's all. Each and every time when you go to trade, first watch the VIX. Okay, first we will watch the global market and everything, Dow futures, yes Nifty. Then you have to watch the India VIX to know how the market can be, whether the market can be volatile. Next you have to go to the India VIX and see how the market is likely to what we say perform. Okay, if the VIX has suddenly increased, definitely there must be some news, and we should be more cautious on the call and put side. Definitely, if it is a positive news, we know. If it's a negative news, we know India VIX will be suddenly rising and we can trade accordingly. Each and every video regarding stock market is very important. If you want to study more about day trading patterns and everything, I have written a book and it is available in Amazon KDP. If you are a serious trader, you go and buy. How I deal with patterns, I have made a separate video, OSR at CPR. Watch the video. The way I trade with patterns is completely different. You can see and find how I trade with logic and everything. And the next thing, learn more, earn more. Like this video and share to the trading community members, so that each and every piece of information is actually very important in stock market. Learn more, earn more. Once again, I'm saying this is John Kingston signing off from JR Trading Zone. Bye.